Did you know that more than 25% of Americans have less than $10,000 saved for retirement? That's a serious gap between where people are and where they need to be financially. If you're here, you probably don't want to be part of that statistic. Welcome to Factful Finance, where we're committed to helping you maximize your retirement wealth. And today, we're diving into the best investment options for a self-directed IRA. First things first, what is a self-directed IRA? A self-directed IRA gives you the freedom to choose your own investments, unlike a traditional IRA, where the investment options are typically limited to stocks, bonds, and mutual funds. With a self-directed IRA, you can invest in alternative assets like real estate, precious metals, and even private equity. This flexibility opens up a whole new world of possibilities for growing your retirement funds. Before we dive into the best investment strategies for your self-directed IRA, let me quickly clarify that this information is for educational purposes only. Always consult a professional for personalized advice tailored to your financial situation. Now let's get into the options that could truly maximize your retirement wealth. 1. Real estate. Real estate is one of the most popular choices for self-directed IRA investors, and for good reason. When chosen wisely, real estate investments can offer consistent returns, especially in areas experiencing growth. Take, for example, Sarah. She used her self-directed IRA to purchase a rental property in an up-and-coming neighborhood. Over 5 years, her property appreciated by 30%, plus she earned rental income. This combination of capital appreciation and steady cash flow helped her grow her retirement savings significantly. But real estate comes with risks, and it's not as liquid as stocks. It's important to evaluate the market conditions and ensure you're financially prepared for any repairs or maintenance. 2. Precious metals. Gold, silver, and other precious metals are a great way to hedge against inflation and market volatility. When the stock market dips, gold tends to hold its value or even increase. Investors like John use their self-directed IRAs to buy gold coins or bullion, benefiting from its long-term growth and stability. It's an investment you can physically hold, which provides peace of mind in uncertain times. 3. Private equity and startups. If you're a bit more adventurous and have a higher risk tolerance, investing in private equity or startups might be a good fit for your self-directed IRA. Many self-directed IRA holders invest in companies that are still in the early stages of growth, hoping to profit as the company scales. This approach requires a lot of research, but for those who get it right, the rewards can be enormous. For example, Mark invested in a tech startup through his IRA, and 5 years later, the company went public, giving him a 400% return on his investment. 4. Cryptocurrency. Although volatile, cryptocurrency has become an increasingly popular option for self-directed IRAs. With digital currencies like Bitcoin and Ethereum making headlines, many investors are including them in their portfolios. A word of caution though, while the upside can be significant, so can the downside. If you're considering crypto, it's essential to do your homework and understand the risks involved. However, for tech-savvy investors, crypto can offer some serious upside potential in a rapidly evolving market. 5. Tax liens and deeds. An often overlooked option, tax lien and tax deed investments allow you to purchase properties where the owner has defaulted on property taxes. If you're willing to do the work, this can be a lucrative way to grow your IRA. Investors like Emily have seen double-digit returns by purchasing tax liens at auctions, holding the liens until they are paid off, and earning interest along the way. Each of these investments comes with its own set of risks and benefits, so it's crucial to assess your risk tolerance and retirement goals before diving in. Diversifying your portfolio is key to minimizing risks and maximizing returns over time. That means spreading your investments across several asset classes, such as real estate, precious metals, and equities. For practical tips, use tools like a retirement calculator to estimate how much you need to save and grow each year. Websites like IRA Financial Group and Equity Trust also offer resources on how to set up and manage a self-directed IRA. So what's the next step? Start by evaluating your risk tolerance, researching potential investments, and deciding how you want to diversify your portfolio. And if you're unsure, it's always a good idea to consult a financial advisor who can guide you through the process. What's the first investment you're thinking of adding to your self-directed IRA? Let us know in the comments. Thanks for tuning in to Factful Finance. If you found this video helpful, be sure to hit the like button, subscribe, and click the bell so you don't miss out on our future content that will help you build your financial future. We think you'll find the video on diversifying your retirement portfolio shown on screen next to be a perfect follow-up to today's discussion. Remember, the best time to start planning for retirement is today.